crazy. This is like, I'm going, this is unbelievable. Anyway, so yeah, we've been on the NDLC for 6 years now.
Mhm. It's
Okay.
been awesome. It's been awesome.
Thank you. Well, hello. You're the one that came up with the brilliant idea. So, hello. Anyway, so you've been with Bank of America, you've been Chase, you've been all these different banks, and you have brought this complex engineering platform of your degrees and everything you've done to the banking industry and be able to do a deep dive. So tell us some fun facts about yourself to get everyone get to know you.
Well, I'm a total geek, I'm just a geek. I like to solve problems. I've built a career on running to the fire. And what I mean by that is just a lot of people, big banks, non-big banks, they don't want to really solve big problems because it's hard. Mm-hmm. It's hard because it's very complex. There's a lot of data, there's a lot of communication, there's a lot of relationships that go along with solving big problems on a national scale. And being able to tackle those and take them on is really what I've been all about my entire career. And sometimes, that bites you. Sometimes you're taking on things and people don't want to change. Right. And sometimes they do. So it's a lot of dynamics with problem solving. It really is a career in turnarounds. And for banking, it's particularly hard because there's a lot of regulation. There's a lot of third parties. There's a lot of, politics that all come to the table all at once. So you have to really be able to embrace all of that. And patience is not a virtue of mine. So that you probably all also know. I'm not a patient person. So let's get working, let's get dedicated, let's solve problems, and let's do it now. So I've always had that thing about me that just keeps me going. Relentless pursuit of solutions.
I love that. Relentless solutions. Think about, you lived in California for many years. You're in DC, so we're bi-coastal right now, everyone. And we have all these fires now. And if you think about the fact you run to the fire, I could see you saying, okay, we got to solve this problem right now. The fire's here. Let's take care of business. It happened once. We're not going to let it happen again. What do we need to fix a problem? And it's like when we started the NDLC, you came up to me and you're like, Desiree, I want a mentor. I want to help. I want to give back. I've been through so much, what I've been through, currently and going through and seeing. We need to play this forward. And it was literally, we were sitting down in that moment at our conference and say, we're going to do this. And you had to fill in for someone who had to call at the last minute to get up and do a sheet talk for 20 minutes. You're like, right? I said, excuse me, get up and start talking. Right? And that's where we went. So you are so true to the fact of run to the fire and be dynamic, and patience is not one of your strengths.
Yeah. Oh, and lessons learned. I mean, one of the things that is really, really interesting in today's world is, we went through this whole housing crisis. That was 10 years of work. But in reality, it was more like 30 years of work in 10. So many lessons have come out of that. Not only, I know we're going to talk about credit today, I'm excited about that, but lessons learned from the housing crisis fundamentally have been able to produce more solutions for the COVID era. Not everything's the same, but there are some really fundamental lessons that we learned. And being able to take all of those and move them into today's environment to understand what works and what doesn't work and how to test it and how to get people on board. Because one of the things that's really challenging is people don't all want to be rowing in the same direction. So how, from a leadership perspective, right, and you've had this challenge, how do you get everybody rowing in the right direction with the same enthusiasm and the same courage to do change?
Rowing in the right direction. I'm going to steal that phrase from you because that is so true. If you think about the Olympics, if they're not in sync of the 8-man crew, it's not going to work. The millisecond. And if you're not, we could go down the path of mass. We could go down. The CDC just came out today and said that, our scientists said the CDC, if you don't have a standard, you're in your office. And if you don't have a standard for the air, then we're going to continue to do this. No matter how much vaccination goes down the air through the vents, you have to control that, go opening up all the buildings. So I like to have a few statistics. And this is, everyone who knows me knows, and when I introduce you, I'm just like, I'm such an awe. You have, anyone remember the white tents in Bank of America? 750 events Rebecca did in 24 months. That's an event a day to provide modifications on decision on site. So remember, we had the meetings in the morning to where the agents came, and the meetings in the afternoon and when the homeowners came. And literally within an hour, they had, was it 200 people you had that were on site per one, that were loan officers, more or less?
At least 200. Yeah, those people worked like crazy, and they were on the road for literally 2 years, and location to location. And these were hard hit locations. This was Miami, Florida, Detroit, Michigan, you name it, Cleveland, Ohio. Like, this is really important. This is where the foreclosure epicenters were happening. And people needed a lot more help and a lot more trust than we were able to provide over the phone. It was just a critical turning point. And talk about those lessons learned. A lot of lessons learned. Sit across from some families who are in this situation, listen to their stories. That's really why I'm here today. Like, I really understood then what the impact of housing crisis really was on families, on people, on generations.
Mm-hmm.
And that is a big problem to solve, right?
Well, we're now in a different world, but a very similar world that we went through back then. And you were able to come in and say, what are we gonna do? Went into the room with 30, all white men, and said, we're gonna do this, and we're putting our job on the line, and really empower that and get that done. So you had to fight through those. And if you think about it, then we were at 2.1 trillion portfolio you were managing on the umbrella. You curated millions of loans to say, this is what we're going to do. This is how we're going to gracefully exit. But this is where I go into our next chapter. But most importantly, you allowed them to have a mental state of mind to continue their journey, and whatever that journey was, and help those who you could. And that being said, we're in that same boat today. And if we jump into the credit situation, we're dealing with infusion of cash. We're dealing with, we're delaying student loan payments. We're delaying, when you have to pay rent, how we're taking extra credit because credit's so easy to come by. And we're getting loans all over the place. And so even though we're not on our 10-year cycle anymore, we're kind of blew that one off the map here. That's a whole nother world. Yeah. But how do we look at the credit situation right now? Let's talk about a little about some of the demystifying credit, but also what are some of the things that credit are involved that people don't think about, that when you look at credit's in my mind a state of mind and how well you manage your functionality of everything that's going around you. So to break that down for us.
Yeah, I look, I think it's a great place to start, but I'm going to take us back one or two steps.
Go for it.
Because I think it's really important to talk about the foundation of where we're coming from in the United States today. And I look at this as a national scale. So some of the things I work with, like the Fed data, the regulator data, the banking data, and really just consumer issues like CRA and low to moderate income. But about 2 years ago, the Fed came out with a study that was like one of those aha moments for people. They said 60 million people in the US, and these are adults, 60 million people cannot pay a $400 emergency. 60 million people who do not have $400 in a bank account in case their car breaks down, in case they need to change their locks because someone broke in case they need to put extra food on the table because someone is sick or whatever. They don't have any savings. Now, really easy to look at the averages, the stock market, the other things that we all do from time to time at least, and say, oh, we're really kind of okay. But the 60 million hit home for me. That people of all ages, adults, cannot make ends meet. Then a year later, COVID hits. And we all know what happened with unemployment. So that fundamental problem has not changed. People do not have savings. Now it's encumbered by less people employed, less wage earners, a curtailment in income, as well as unemployment that has never been seen since before at the most since the Great Depression. I mean,
Oh,
we're talking about leaving behind a whole lot of people. And those are families and kids, and those are generational impacts. So like housing was, to me, a big concern around generational impact. Somebody has to have a house to feel safe.
right.
They have to have shelter to be safe. Now we're in a pandemic where all these things are now swirling, and credit is at the fundamental center of someone's life. Do I go to school? Do I put food on the table? Can I put shelter? Can I be sheltered, whether it's rent or housing? There's $1 trillion outstanding debt in credit card alone in the United States, in credit card alone. Personal loans, fintech lenders, we talked a little bit about this before we started here today. Fintech lenders are the fastest growing personal loan providers in the US today. Over $400 billion, billion, that's a B. So credit got $1 trillion, 400 additional billion dollars. And what is that doing? It's helping make ends meet, but it's also putting people in a really, really bad place. Because I like to say this, Desiree, it's really easy to get a credit card. It takes 2 minutes.
Right.
It's almost impossible to get out of debt.
Well, think
Really
about
hard.
this. I know some people who have 7 credit cards from the same company.
Yeah.
There's a problem there.
Yeah.
And when you're looking at, I love that, to have a coined a phrase, 2 seconds to get a credit card, never get out of debt, or 2 seconds for a credit card, put a scale on that.
Yeah.
And then the other thing is that we forgot the medical expenses on everything you added, the medical side of it. Do I go to the doctor? How do I go to the doctor? Do I have to stay home because you can't get to the hospital? You can't be in the hospital if you're the care provider, whether it's someone who's sick, especially if you have lingering conditions, you can't go back. So to add to everything you have on top of that, and then getting those medical expenses get tapped on to your credit report, that's done.
It's a great point, because your point is exactly why it's so difficult, because people have their own individual credit problems. It could be student loans, it could be medical debt, it could be they had a prior bankruptcy, it could be 7 credit cards. You know what? I've seen people with 30 credit cards, and what they're trying to do is balance those payments and swap in their payments and try to get a lower interest. Interest rates are at a really high rate today, 36% or more in some cases. Can you imagine like $100 and 36% interest rate is a lot of money on that balance, and it's stacking up month after month after month. So if you wait, more and more is owed. Then the collectors start, and then what I call the wild, wild west of debt relief goes into full action. And that is not a protection. There are very few safe places for people to go, and it's very scary. So put yourself in that place. I've got a housing payment I have to make. I've got a car payment because I have to get to work. I've got, one of my 2 jobs I was let go from. They closed down. Now I've got a medical bill. I've got 7 credit cards. I've got 3 kids. I got to put food on the table. This is what we're talking about. This is really hard.
The thing that I think that one of the biggest hierarchy thing is that the mental ability to address it, I'm not going to say even rationally, but just even have the vision to say, I can manage that. And that's why your organization, what you've been doing for all these years, and your experiences and your decades of being in that space and understand it from, we were just talking, what it's like to be on the other side of the table than when you were inside the table of all the different integrations going on, to understand, to represent the consumers and how to better themselves and financially, not only in the credits, but starting, as you say, the root of the problem is you have to have the ability to make them feel like this is doable. And that's why it's so important to have the layers and say, we start here. It's like, of having a major serious illness or disease, you can't sit there and say, this is end all, this is what we do. You have to start in sections, and each day take another day and feel better and be able to address it and go through the process. And that's what you got to do with credit. And I think that's so powerful that you have to be able to look at it from a standpoint of saying, this is doable, but we've got to start here. And every little success, we're going to acknowledge it so we can grow and feel like we're making progress. Because this is not going to, it took you 2 seconds to get that credit card, but you have 10 of them now, and you have this, and this. So it's going to probably take you a year, maybe 2 to fix this, or even longer. But we got to start somewhere, like that losing weight, that 2021. What are we going to do? We're having inspiration, right?
Exactly. I wish that people, like, there's 2 things that I think about when you start. It's trust and hope on one side of the ledger.
Okay.
And it's fear on the other. This fear, or the lack of trust, is what fundamentally keeps a lot of people on the sidelines, not solving, not addressing. I mean, it's kind of like the foreclosure crisis. Remember, people just didn't want to pick up the phone. I don't trust the banks. I don't want to deal with them. I don't want to lose my home. So credit is a bigger universe of the same problem. So, nonprofit credit counselors, we have 1,600 of them in 54 companies across the US. That's fundamentally all they do. They help everybody. And by the way, it's not selective help. Anyone that calls can get help.
And it's free, right?
The credit counseling session is free. That's what we do as nonprofits. Now, we have specialized programs also that are not available in the market. So if you're thinking about, well, I have one credit card and it's with one bank, I could call the one bank and I could negotiate. But now what you have is you have 7 different banks, a mortgage or a rent due, a student loan, a medical debt, a personal loan. Think about it. How are you going to navigate all that? When, by the way, not everybody has a finance degree and an accounting degree. Stuff is
Even
really
if they did,
tough.
doesn't matter. They might not do it right.
Right. So we have helped millions of people, but there's so many more people. And that's the run to the fire problem for me. There's so many more people who need so much more help.
Well, that's why we're here, is to really dig in to say what the rules, what the, me, it's always about getting outside the 4 walls. And that's why we go live with the NDLC principles. And this month is called Believe. The month of February is all about the self-belief and to believe that whatever your mind can achieve, it can conceive. So with that being said, our rule number 1 you have down: managing credit can be as simple or as complicated as you make it. And for me, that really amplifies: pick up the phone and call NFCC. Pick up the phone and call someone that is not in it for the money, because you're free, is not in it to do anything that's going to be, the idea is that you get to say, I helped these families, I helped get this going. And then you tell your friends and your friends. And the whole idea is that passing of the torch, that generational conversation, that they're here to help, because you were on the other side and you've already proven. And this is where I think that amplification of proving that you did you saved all those loans and homeowners and got their, 25% you had writing off in some of those mortgages that were unbelievable, $250,000. And now let's go back to square one and say, fix the credit, and how are we going to do this? Let's talk about the rule number 1.
Yeah, I mean, well, back to believe. I mean, taking that very first step means you believe in someone. It does. It really does. It means you believe also enough in yourself to trust a trusted party to help you navigate this. Because I would say it's never simple. It's never simple because it's you, it's your family, it's
personal.
It is so personal. And we know that talking about this stuff is really hard. So you think about, well, if I call my bank, I'm going to get somebody that's, reading from script and, has the right things to say. And no, you need to have someone who understands it's you did not cause this problem. and you're looking for that trusted help. And developing a roadmap toward that help is what we do. So pull the credit. What's on your credit report and why? What happened? Understanding your side of the story is really important. Listening is really important. And making sure that individuals and people know that it's private. We're not going to run to the banks. We're not going to run to your landlord. We're not going to put you in a place that you don't want to be. So that trusted, building that roadmap over time. And look, sometimes, Desiree, to your point earlier, it's not like 5 weeks and you're done. It's 5 years at sometimes. But 5 years on something you can do and you can afford and you can sustain.
Right.
And you can put some savings away, because one of the things I'm really bent on, that's the right way to say it. I was going to say something else, but is people need savings.
Yeah.
People need savings. Savings for a rainy day, savings for when someone gets sick, savings for your kids. Like, there's lots of reasons. And this culture in the US has been anything but that, enabling that. Whether it's the minimum wage, and we could probably talk about minimum wage all day long here, but maybe a separate topic.
Right.
But we need a living wage, and we need plans. We need to help people. It's this principled approach to helping people out of debt. We have a principled approach in getting them in it,
Right.
but now how do we fundamentally develop standards? And that's the whole policy angle of this. What products? Is it modifications? Is it forbearance? How do we help people out of persistent debt when they can't help themselves? And that being a safe place to be. That's the tough equation, right?
Well, absolutely. And I think, you touched on something that really is powerful. We talked about the personality. You could see in your voice, you could see your body language. I mean, this is what's so cool, is that even though I can see from the chest up, but we can see your movement, and oh my gosh, and you can see the passion and conviction you have to do this. Again, Dave, you've been in the residential side for so many decades of getting to home ownership. So you clear up the credit, you can actually go and get a loan and get a home. And have those 4 walls and sanctuary that we started, 5-6 years ago here at the group, saying, what you do behind your 4 walls. And if you want to live in, like I do, with all these antiques and crazy stuff, that's okay. It's my home. It's my life. But the thing about the personal side is that we don't trust. The doctors have a rule. You're not allowed to operate on your family, because the idea is that you get involved and you don't think rationally, and you don't sit in the frame of, as a doctor, how do I treat this patient? So from a credit standpoint, you might have someone who's a relative who's in the lending business or in real estate or as a CPA, but going to someone who has completely no what's the word, interest, is that can be misled by, and you might not tell everything to, because you want to harbor, a doctor's only as good as what you tell them of everything that's going inside you. So going to an independent company, going to a place that, like you say, it's managing can be simple or complicated. You have to tell everything. You have to lay out your cards and know exactly. So when someone asks you, why did you open this credit line? How are we going to help this? And what is the story behind it? You might not tell that friend or someone else, because even though they're trusted, to what level of trust, where a complete stranger, you would trust more if you have that full capacity to understand they have no tie to anyone else, the banks, the IRS, whatever, they feel comfortable that have that conversation. So I think that's very, very powerful.
Yeah, and it's a hard first step to take, because people don't really know. Nonprofit credit counseling has been in the United States for over 75 years.
Didn't we know
and
that?
it's helped tens of millions of people. But it's the best kept secret. It's a real problem. People don't know about it, so they don't reach out for help. Well, one of the things we're trying to do is this campaign around awareness, and helping people to build their own roadmap on their own terms to get out of debt, and to be there. Importantly, it's like being on a team. Everybody has to play their position. So, if we're going to win the game in the long term, you need to have someone who knows you, cares about you, can give you solid advice, and can keep you going. Because there are going to be those times where it's like, I just can't do this one more day. Pick up the phone and call. I think it's a great example with the doctors, because financial health and being healthy medically, there's a really important tie there.
Mm-hmm.
When people are not feeling well financially, they get sick. Their immune systems are less.
Yep.
They're more apt to take chances, other things. But those two things tying closely together, and having an advocate like your doctor with a nonprofit credit counselor to help you along the way in a very important, trained and non-judgmental way to get you through it.
I like the fact that you highlighted along the way, and that the fact that this is a one-top shop. I call up, you give me the, what we'll say, a booklet, and here's a checklist, go do it and go off. You're like that personal trainer that keeps up on you, checks up on you. Did you do this? Did you? Why didn't you? Well, I had this. Well, okay, so before you make that decision to pay this off or do this or do that, call me to figure that out. And that's one of the biggest things I have about CPA. So be honest. Let's take it to the other direction. Those of us who own small businesses, or those who are, navigating, I'm out of work and now I start a new company or whatever that's going on. You take a triple P loan with SBA, or an EIDL loan, or you go get some kind of cash flow injection or not injection. How do you manage that? And having someone that's not just about the cash being here, is how do you set that out? And so my thing from the CPA was, I went to the, you go to the CPA and you say, I need to talk to you about this. Well, if they're so overwhelmed and the rules are changing on a regular basis, you can't make that informed decision because of what's going down, where you're sitting here going, I'm not being paid. The CPA gets paid. You're not getting paid, but you are being subsidized, obviously, by the agencies and what your work's doing. But the idea is you're here to help the people understand fundamentally that themselves understand how to navigate, to grow and experience, and know not to make the same mistake twice, where instead of just paying for someone to do it. So you're educating them in the financial mindset on credit versus on being just oh, this is what you need to do. Okay, I'll just do that.
Yeah, I mean, it's complex, Desiree. It's complex. And it does take time. It takes a roadmap. It takes someone who is certified to help you. The other thing I would just want to point out is there's lots of scammers out there. There's lots of fraud. You don't know where to turn. I sit on the CFPB Consumer Advisory Board. And, one of the things we've been really working on and trying to re-emphasize is, how do we make sure that consumers, when they're looking online or other places, that they know it's a safe place to go? It's a really difficult question. I don't know that we have all the answers yet, but people need to be aware. They need to, even if you called a nonprofit credit counselor and said, hey, do you know this company, that company? What about this? Those people are here to help you, even with that question. That's really important. But then we get into, what do you need? How do you need it? What are your real goals for the next year, 2 years, 3 years? Maybe you want to send your kids to school, but you don't have any savings. How do you do that? So there's lots of different questions that you might have, that some people will just charge you a fee up front, or they may take your money, or they may give you bad advice. You just have to be really careful with that choice.
I love the fact you brought up the CFPB. It's the Consumer Financial Protection Bureau. And what's so important about that is that if you think about the name, Protection Bureau for Consumers, it's here to help you don't get victimized by it. And when it first started out in 2011, yes, it had a little slow going, but now, with advisory board being on there with the experts like Rebecca and stuff on it, it really, and there's an advocacy side too, that even monitors to make sure the CFPB is doing their job. So with the ombudsman side and the advocate side, so we, as NRDB as a group, we've been involved in that group for many years. So it's really the depth that as I like to say, the new term is weeds. Go into the weeds. We really go into complexity, and we talked about that. So love, love, love that. And that's very important that, yeah, I have a friend down here, or we go to the personal side. Well, there's a local group that might do this, and they say they're a nonprofit, at what point? And I think that's exceptional. So if we go on to rule number 2, the credit pool has a lifeguard. If you apply that to like the CFPB, you apply that to, does it sound too good to be true? What are we looking at? Getting out of it is not so. How give me some examples of someone or something that you think is would be really relative to our audience, because remember, we're talking about from poverty to the infrastructure to homeownership to being business owner, because credit involves all those spectrums.
Yeah, credit is in everything. Credit is in everything. So, and it's better to know how it's going to impact you than put your head in the sand.
Yeah.
Like, even if you have had mistakes in the past, that's okay. Mistakes happen. Now, what do you do to go forward to rule it? So to manage it, you're going to rule this credit. But it is really scary if you don't know how credit scores work. Okay, credit scores go up and down with different things. And there's so many different scenarios of what can drop your credit versus what builds your credit. It's good to know both. Who can help you do that? So, what we do fundamentally in nonprofit credit counseling, we'll go through that credit report on your terms. So what's brought it down? How do you rebuild it? How long will that take? What are the steps to take? But I think credit score, which by the way is in people, some jobs look at credit scores, some tenants, to be a tenant, you have to have a good credit score. Like it's pervasive. That's the right word, pervasive in our country. And it's scary. So like managing your cash is one thing. That's really important. Put food on the table, pay your car lease or your mortgage, and pay your bills. But the other thing is, how do those two things actually equate? And is my 640 as good as I'll ever be? Like maybe I went from 580 to 640, and that took 5 years. Well, how do I go from 640 to 700? Is that good or bad? And how do I do that? And what are the drivers? So those are fundamental things that it's really important to know. In fact, some of these free credit reports online are great because you go in and just pull it, understand where you are, understand what it says. It's CFPB. We're talking about the CFPB. They have a lot of good advice. So if you just want to go to the cfpb.gov, look, and by the way, nonprofit credit counseling is on there as a recommended step. But it's really important to educate yourself. I think it goes back to the more you know, the better. And it can be scary. It can be scary if, let's say, I'm not a math person, or, I'm not sure, I don't even have a bank account. What does that mean? Or, I had a bank account, now I don't, or, there's so many different scenarios. So what I can tell you is, statistically, tens of thousands of people who have gone through credit counseling over a 5-year period have not only improved, sometimes up to 50, 60, 100 points on their FICO scores during that time, managed their credit beautifully, and were not experts when they started, not experts at all. But it's building the roadmap, learning along the way, and then, by the way, teaching your kids, having discussions at the table. Mm-hmm. Like the whole conversation about financial capabilities and savings and some of those fundamentals really start at home. Starts with that kitchen table conversation and getting your kids excited about talking about that and why it's important.
Well, I love the roadmap side because you have the financial, the cash aspect of it, but then you have the credit. So do I take, some of the misnomers is that I'm going to take my money and pay off this credit card versus then keep this money and put food on a table, but I'm going to manage it. What credit cards have a higher debt? What's going through the different scenarios? Do I go out and do I allocate time to it? And I kind of like the idea that you talk about the kitchen table. maybe from having, if you think about the family offices, the uber ultra high net worth individuals, they have family time and sit down and work for the business. That's why it's called the family business in the aspect of family office. So having that said, you allocate an hour that you sit down at least a couple of times a week, and you have the discussion with the parents, but the kids are there too, to talk about, okay, so this is how much cash we get today, this is how much we might get there for the week, but this is where this money is going to go, because it's going to allocate with this kind of credit. I can have this kind of scenario, and teaching our children at a young age, I
Mhm.
think, is the power of the value of money. The disparity we have between the rich are getting richer and the poor are getting poorer, that we've got to keep the middle, we've got to keep it growing together. And I think credit, we worry about going to Starbucks and having a cup of coffee, and if we don't go to coffee and get a cup of coffee every day, we could save X amount of money and apply that to something else, right? In the little scenario. The same thing with credit. If you have one that's at 13% versus a one at 9% or 6%, which one do we pay off? Because the EIDL loan, you can right now get it at 3% interest, or even a PPP loan. Even if you don't qualify, you get it 1%. In your lifetime, you ever seen that cheap of money?
No, never, ever.
No. In real world, that's free money. So you
It is.
take that money and pay off this credit card because it's this high. And yes, you have your business wrapped into it. But the idea is, you need to figure out, you need to put down the time to manage cash flow, manage credit, and manage the idea, whether it's on a, like you said, 36%. Who would ever think in today's world that you would have a 10% interest rate go up to 36% because you don't have a payment, because you miss one payment? When you hear interest rates on a 30-year fix at 2%, the disparity is not 1 and 1.
Well, I call it the tax, because people who have real difficulty having savings or making a rent payment, or even paying off their credit cards, have a huge tax. Renters statistically in the United States today pay way more on average, dollars out the door, for no equity, no wealth building, nothing. And a part of the work that we do in preparation for home ownership is really get in good habits, pay off this debt, watch your score go up. It's exciting. Like every month your score's going up. It's fun. Make it fun. But reality is, like, making sure you're making wise decisions with a trusted partner that you can call anytime, day or night, send an email, and you're not in it alone. These things are really difficult. You're not in it alone. And there's some great stories about great people that, like, they start out like saying, I'll never do this. I've never been out of debt. I'm swimming in debt. I've got collections. I've got my phone's ringing off the hook. It's terrible. 5 years later or 4 years later, I'm on the path to savings. I'm going to go back to school. Like, it really can happen. It's happening every day. Is it an effort? Absolutely. But, don't be selfish around it. Think about the others around you, because you will become the role model. They're like, oh, I saw what they could do. I want to do that too. How do I do that? And just that, it will change your life. It will change your life.
And people, everyone who's following us and and listening to us on live, and the recordings that you follow through, we're talking hard hit areas. We're not talking just, someone who had a job, is making $50,000 a year, and then, has a few debts and get right back into job. We're talking some that have never earned more than X amount of money. And, you talk about 36, percent interest rates on credit card to get it to go that path. We're talking still NSF funds. The amount of money, the biggest wealth that a bank makes is from the NSF. And those are from off the backs of people who are not managing their credit or are not managing their cash flow.
Well, that's a great point. I mean, overdraft fees are really difficult. And, there's two sides to that coin for sure. It's kind of like a short-term loan, but it's at a high interest rate when you think about it. Like, you think payday loans are high, try a overdraft fee, 500% sort of plus interest rates. So it's important to, again, cash flow is one side of the coin. Repairing your credit over time is the other side of the coin. Those two things marry in the future, because as your credit score gets better, your access to credit gets better and cheaper. So
Yes.
that tax that we're talking about, I call it the poor tax, starts to lessen and lessen and lessen. And all of a sudden, your cash flow is in a really different place in 5 years or 4 years or 3 years or 2 years than it ever was. And more importantly, and I really believe this, the mental stress of that situation starts to go down. I was like telling people like, well, try being poor for a day or two. It's hard. It's hard to be poor. I've been very fortunate in my life. That's why I'm here doing these things to help other people figure this out.
Mhm.
And it does. One person, one family, one generation, one community. It impacts everything. You start really addressing it.
Well, the poor tax, I'm definitely gonna start using that a lot in the conversations I'm having because, timing's critical. Collection agencies, credit score implications, mounting fees, increasing interest. That is, we just talked about going from 10 to 36. You're talking about, that poor tax. And if you think about that, I think that is a great reward system of literally in a positive sense saying you want a poor tax or you want to avoid the poor tax. This is what you need to do. And by aligning the word poor tax words with that, I think then people then will really gravitate to it because it's an alignment of connection of saying you're being penalized for this. Because until you put down a true penalty to go with it, I'm a real stickler on you charge me interest because I was a day late on payment. I pay my credit card every single month, and now you're going to charge me, some little fee. But still, that's my money that you should be taking because I couldn't get through the line. Internet's been down, whatever. So that in itself, if you're thinking about in the scale of what's being done, that's huge. I love that, Rebecca. I think, coining, like we coined sanctuary years ago, that life because of my dog. I love to see the poor tax be aligned to you're being penalized and you don't want to have that poor tax added to you. I think that alignment is huge. And it really takes us into rule number 3, the short game is important because the long game is everything.
Yeah, the short game is you have to reach out. You have to start your roadmap. You have to have a trusted partner. I don't think you can do it alone. I think that's what I see as a big barrier. Like it happened during the foreclosure crisis. It's the fear of reaching out and not knowing what's going to happen, not knowing that you have a trusted partner, not knowing that it's going to be better versus worse. Reaching out to a trusted source to start the discussion. It doesn't happen to happen in one call or one video chat.
Yeah.
But you have to find someone that you can connect with because it really is that life-changing event over time. I always, tell people that come to work in my organizations, like, when you look back the next 12 months, you should feel good that you've done more than you've ever done. And what that does to your career and your person and your excitement about solving problems and adding new programs or whatever it is you're working on or helping more people.
Right.
It's just same thing goes here. The short game is get started. The short game is the hardest part is to get started.
Well, okay, so if we take this into a real world of our frontline workers, they were working a year and a half ago, a year ago. They were working 20-hour days, and they were coming back mentally exhausted in the thought of I've never seen so much, especially in the ICU and everything else
Mhm.
going in. And they're trying to, I mean, imagine you heard a little bit of it. Who's paying their bills? If they're to be demanded to be on call 24 hours a day, and they're mentally just trying to cope with this and what to be done, trying to save a life versus pay my bill, and that whole thing that came through it to go clean that, scenario, having that someone who can say, okay, well, can we justify that because we were out saving lives, or we were, part of that whole thing, especially in New York and some of the other hot spots that's first started this. Um, the fear of, well, I was so good here, I mentally can't absorb this. I think the idea of fear and forcing our priorities to take the time to do it. I think fear is one huge, probably 80% of it, but 20% of it saying it's got to be a priority because it's going to help me have clarity in my mind and clarity in having a goal set. Because when you get structured, I know personally for me, when during the 2020 section, the last quarters, it was like we released the NDLC principles the week before the pandemic hit. And here we spent months curating those principles on acknowledge trailblazers, on pass the torch, on believe and listen, speak out. And these principles were not just about women, they were about all different economics and societal and everything you could put into it. You'd apply it to everything. And we look at that and I go, we have to bring this back out till we make it a daily mission, not a one-time off. So the whole month of February is belief. So every day you got to believe in yourself. You got to believe you can get it done. You got a self-belief of taking care of your credit, applying it. Think before we act. The ability to have an engagement on someone who's keeping me accountable, the NFCC. It's someone that you find someone you like. And I always say this, it's not about the company. It's about someone that you connect with, someone that you really gels with your personality, because you can be the best at something. And if you don't get along with them, if you don't like your doctor, and he might be great, but you got to be able to connect. But sometimes tough love is better too. Right? You don't want to hear it because I'm an enabler.
It can be.
It can be, but not always. So we're in a discussion. But you're really the real thing about the credit is that you've got to believe that it is the core and the root of you being. This is how people look at you, companies look at you. The world revolves around how it's going to analyze, are you a good risk, and how much debt you have, how much you paid off, what circumstances have gone through it. So you got to tell your story. And this is what we're doing right now, is we have to come back to the legacy of telling the story. And by showcasing, in my opinion, where you've gone, what you've been through, because you've gone through the ringer in your career and ups and downs and informational and things that you've proved yourself how great, but you had to stay true to the course. And that's what credit's about, is staying true to the course and say, I can get this done. Because cybersecurity, all-time high, people stealing credit, people taking advantage of people's ability to say, I am you, with technology right now. So if it's not for you because you lost a job, it could be because I know that I have some relatives who actually got their credit stolen. It took them 3 years to clean up their credit because it was stolen. So understanding an agency. So talk, if we go a few minutes left. So talk about, if I had my credit stolen and it was completely shot, do you work on that?
Well, that is all part of the roadmap. It is really hard to do these things alone. It's really impossible. If you think about like 20 years ago, 30 years ago, 40 years ago, not much technology. Your data wasn't being sold and shared. The fraudsters had a harder time getting to you. Now it's so easy and it's so dangerous at the same time. So build your team, have people around you. Nonprofit credit counselor will be on your team. And you know what? Take credit for that. People are like, well, it wasn't really me that did it, with somebody else or this or that. You did it. You take credit for it. You show people the way. It's really enlightening. It really is. So many testimonials, so many, like you read some of these testimonials and like, down and out for years, and phone calls and changing bank accounts and the IRS after them and all this. And today, in a whole different place, emotionally, mentally, knowledge-wise, learning along the way. So that can be fun. But most importantly, able to provide for you, for your family, for your community, what matters to you. And meeting people where they are. I think so many people say, I want to create products, I'm going to shove them out there and force people to take them. No, that's not how the world works. It's not how people work. Building a personalized what works for you may not work for me, may not work for somebody else. What works for you, and taking that first step. It's exciting. It really is.
And thank you for doing this, because the idea is that there's so many different, financial literacy courses out there. There's so many different, I call them silos, because the thing is that financial literacy is not going to dwell on just credit. It's going to give you the overarching spectrum, and we live in a world that we can talk to each other so regularly, easily. Okay. We now seen each other more than we ever seen before, but we're all not seeing it because you only see this much of me. And what I'm really doing behind the scenes is completely something different. We saw that with people not wearing any clothes on the bottom half, but that's a whole nother story. So the idea, right? So what I'm trying to say is that we have become so siloed as a society that we have to look, and this is why this organization exists, is that we're elevating women, bridging the industries and changing the world. And here we are, we're saying, find someone or in an organization that really specializes in how to help you credit-wise in all different elements, because then you're going to realize, oh, I didn't know this is how it works. So if I did this and this in my business, or I did this and this and this, and I was able to show someone with all the different ways of taking advantage of systems, we can share a two-way street, not only from, starting from having no credit or having really bad credit, or there's another thing. How do I even get credit? How do I, do you help in that?
Yes. Like that's so many people. And the technical term is invisible or underbanked or
right.
Invisible credit, what have you. But it really is about, how do I build credit to help me have more access in the future without that tax, right? How do I get the best for me?
The poor tax. I love that, because you notice how people, there was an article, oh, well, Amazon didn't pay, they had made how much money and they didn't pay tax. Well, obviously there's ways to, defer and all that kind of good stuff. But think about it. What did you say? The poor are paying the tax. That's why we have a poor tax versus then the rich tax. Yeah. It's a whole different thing. So, okay. So we have 3 rules. Managing credit can be as simple as complicated as you want. Obviously we went through that. The credit pool has a lifeguard. NFCC is one of the greatest, the oldest, the biggest, been around forever. And you hear the helm of Rebecca. The fact that she went through from a complexity engineering degree, but more importantly, she went through the financial crisis. She was in there in the fire, went into the boardroom as the only woman. We could go on and on, but the idea is that, be too excited. But changing and understanding. And the greatest thing about that is that patterns. Sitting on the CFPB Advisory Council, if you see that something is become a repetitive thing, it's what I love about this world of communication, is that you can go and say, you know what, this is something we could do to change. This is something we should make an adjustment to. We're here to help navigate and help improve the rules, and not just be here to be, well, this is the current rule and we're all going to play by this game. How to make things better. Because if we don't as a society change things, we can't be living in the 60s and 50s and 40s. We have to grow with it. So they think that's huge. And so the short game is important, but the long game is everything. So we heard it's going to take, could take up to a couple of years. It could be up to 5 years. But hey, realize that game now. And in 6 months, you could do it. And you hear these companies that, oh, I can rescore you. I can flip it in 30 days. At what cost, at what value is it really changing your habit? Or is it just to get you a home, to put you into a different bracket? So I love, don't just give me the food, show me how to make it, because guess what? I couldn't buy it from you. I need to be able to make it. So that manufacturing of how we take care of it is so important. Okay, cool, cool, cool. So tip of the day. Would you like me to read it?
Yes, please.
If you are an individual who is struggling with repayment of your credit obligations, or if you are a lender and or underwriter and or financial advisor working with someone in that situation, consider the short and the long-term value of nonprofit credit counseling provided by the NFCC network of counselors, who can be found by visiting nfcc.org. So there you go. So you're on the CFPB. You are at the helm of the financial crisis of curing and saving we're going to lose billions, but save hundreds of billions and hundreds of millions of homes, changing their life. So you have the top experience at the top agency, the longest agency, doing credit counseling. It's free. It's in it for the long game. Did I miss something? Great personality, real mom, has kids, understand. At the same time, you live the life of, it's a journey. And if you can have a small success and say, you know what, my credit score went up, I was able to get this and change. And that's where, I know groups like FACE, Hey Pen that you met, and the great work that does together, you're there to work with the locals and the information that you share, like you said, you have. So you said 1,600 different counselors or offices. So give me a 2 minutes now.
Yeah, 1,600 certified credit counselors in the nonprofit world, 54 nonprofit certified agencies across the country, working in every state, Puerto Rico, Guam, all the territories, everywhere. So easy to contact by phone, by email, look on our website. We'll connect you free of charge. And it's really about being aware of that and taking that first step. And 5 years sounds like a long time, but every month you're feeling better. You're like building that confidence, building your knowledge, getting to a better place and getting rid of those taxes that you don't want. So it really is liberating, and it happens pretty fast when you feel good about it.
You say 5 years is a long time. It is, but think about it. We have now been 12 months.
Yeah.
And we're all getting better. Hopefully, most of us are getting better we still have the ebbs and flows of good and bad. And I think the credit aligns with that it's just a matter of make it part of your business to understand what others are going to judge you for on getting access to capital. And that credit has to be the focal point. And yes, there's been talk about how we're going to do credit score changes, and there's alternative credit, and there's, we have the, get your Edison bill and your utility bills and insurance bills. But all that is about how do you leverage? Do I pay now? Do I pay a service fee to go with it? And what is that costing me? And I love the way you said it's 500% more if you do on the NSF funds versus going at that short-term loan. So rephrasing things, I think, is probably the most valuable thing, because we all get caught in the cliche, trusted advisor, I like to say that with inclusiveness. Well, everyone uses the same word. It gets overused. So I like the fact you call it the poor tax, understanding the poor tax, applying the number system, go with it. And if you can equate that, I think we're going to get a lot more people to understand the awareness of what we're talking about, versus then just being, it's the word listening and absorbing, need to get that focal point, right? So we're going to do a Photoshop, everyone. So you're going to have to bear with me, because I want to make sure we have this to where we go with it. I know this is as professional as one can get, but that's okay. We're going to do this. Smile, because it's always fun to get this done. But in the meantime, what I'm asking for is, so we got FCC. What if someone wants to get a hold of Rebecca Steele? Can we do it through LinkedIn?
Yes, please. LinkedIn, Facebook, any social media platform, or NFCC. I get all of those messages too. NFCC has accounts on all social boards. So
There you
whatever
go. So thank
for
you
you.
very much. And so for the tip, basically on your to-do list for this week, everyone needs to reach out to NFCC. Make sure you have it as a resource on your website. All of you who are agents who are watching, all of you lenders, like she said, banking officials, make sure, because you want to have someone who's not you, that's, you know, in the pocket, that you can have a third party to endorse to help and get this together, because there's always new things coming out, and you sitting on a CFPB, you're going to know the new rules and regulations and what's being adjusted to them because of different avenues. So I think that's so powerful. So hugs, Rebecca. I'm so excited. So this is, yes, we can chalk it up. We did it.
Yeah, and I appreciate you, Desiree. You are an inspiration to me and to so many other people. And I really appreciate you taking on this topic. It's not an easy topic to take on, and I really do appreciate it. And it does fit right in all the principles that
doesn't it? Well, thank you for being part of it. And you know, I know we all are juggling 15,000 different balls right now, but it's the reality, and this is where credit stems. You have to go the route. And if we don't stay connected and understand that we're here to help each other, and true passion, you can see the conviction we both have, it's really about that core essence. Because if my mission in society is how I measure success, if I can, the betterment and sustainability of quality of life, credit is one of them.
well
So
said.
thank you very much. So remember, this will be out on YouTube and iTunes if you didn't catch it. And also on our website. I'm Desiree Patno at Interby.com, and we're here to help. So we will direct you back to Rebecca and her organization if you call us regarding credit, because this is what we do, in addition to all the different great things. So thank you very much. You all have a great week. And thank you very much, Rebecca.
Thank you.
All right. Take care. Bye-bye.